Welcome back. I'm Ted Thomas, and on this video, I'm going to answer the question, is Georgia a tax lien state or a tax deed state? Now, before I finish in this particular part, I'm going to give you some insider tips on how to make money, and you're going to love what we're talking about today. In addition to that, I'll show you about some mistakes. Now, newcomers make mistakes, and I want you to be sure to avoid these, so I'll come right back. The question on this episode is, Georgia a tax lien state or a tax deed state? We're in for a big surprise, and you're really going to like this. Georgia is a redeemable tax deed state. That simply means that the property owner didn't, first of all, pay their tax, so the county is going to issue and sell at auction a tax deed, but it's redeemable. Now, what on earth does that mean? That simply means that if I raise my hand like this and I buy that deed at the auction, it's redeemable. So the property owner, up to 365 days, up to 1 year, can come in and redeem the deed. So that means I invest my money, but I don't get possession of the property. I have to wait 1 year. Now hold on and listen closely, because if you get this, you're going to be able to make lots of money in this business. So they sell a redeemable deed. I purchased the deed. All right. Anytime that homeowner comes in to pay, they have to give me back all my money plus 20%. So if they come in 10 days and pay me, I get all my money back plus 20%. And that works all the way up to day 364. So I'll give you some more details on this as I go along. But I do want to tell you, Georgia has 169 counties. That means there's 169 auctions this year. Okay, now most homeowners will redeem the tax deed. The county sells those deeds at auction. Now some of them will do it very quickly, 10 days, 25 days, whatever. Others wait all the way to day 365. It doesn't matter when they redeem it, they'll always have to give you back all your money. Now keep in mind what I said, you'll get back all your money. Now you did not give anybody your money, you invested with the government, you're going to get a check back. So you can be comfortable knowing this is a predictable, certain, and secure deed. All right, now, what if they don't pay you after 1 year? That's always a big concern, isn't it? Well, if they didn't pay the county, you're saying, they're not going to pay me. Well, if they don't pay you, then you can get the property. But I'm going to tell you, if one of my students, I prefer that you don't get the property. I would tell you, let the deed roll over into the second year. Day 366, you would earn 30% on your investment. If it goes into the third year, you'll make 40%. If it goes into the fourth year, you're going to make 50%. And the check doesn't come from Ted Thomas, I can assure you. It comes from the property owner when they want to redeem that property. All right, so what are we talking about here? We're talking about a passive investment. What kind of investment? You raise your hand, you buy that redeemable deed, and then you sit on your rusty dusty. How's that? Sit on your rusty dusty, don't have to do any work to do. So Georgia is a great place to buy tax deeds, but remember they're redeemable. All right, now if you purchase that deed and the homeowner doesn't pay, you're going to get the property. So in just a second, I'll explain the difference between the two. All right, so how do tax liens work? How do tax deeds work? Tax deeds, generally, they're selling the property. Well, that's what they're doing in Georgia. They're selling the property. However, they try to be good to the homeowners. And they say to the homeowners, and all property owners for that matter, if you find the money to pay your taxes, well, come in and pay back the tax lien, whatever the bid was, and pay a 20% penalty. So they're just not trying to kick people out of properties. They're not doing that. But it's a powerful investment for both parties. Actually, if you think about it, the county's doing what? The county is actually being benevolent. They're giving this homeowner or property owner 1 whole year to pay their taxes. So the counties are pretty good. Now, there's 169 counties. There's no way you're going to be able to cover 169 counties. They all are authorized to have an auction, and they do it once a month in Georgia. You don't have enough life left to go to just the auctions in Georgia. Nobody even knows about it, so I can assure you that you're going to be successful in Georgia. You just have to learn how to do this. Now, Georgia pays 20%. There's other redeemable deeds. They're also sold in Texas. They're also sold in Ohio. I won't have time to cover those today, but you're getting the idea. So what kind of investment are tax liens and tax deeds? They're the safest in America. I say that because you can't give money to me, you can't give it to a broker, you can't give it to Wall Street. This is an alternative investment that the government created 200 years ago. I didn't create it. I just studied it for years, and then I started doing it. I've done it for 30 years, but teaching it for 25 years. People come to me with thousands of questions. I answer their questions, and that's what we're doing here now. This is a low-risk investment where you get paid. If you don't get paid, you will get the property. All right, so let's talk a little bit about these tax deeds. Now, in Georgia, the tax deed is redeemable. That means that the person that lost the property at auction can now come back in and get the property. In most states, a deed doesn't work that way. So in the majority of states, if it's a tax deed auction, what will happen is the auctioneer will auction the property. And when the gavel comes down, the auction is over. It can't be changed, so you better have thought about what you're going to do with that property because you now own it. Now, the beauty of tax liens and tax deeds, in most states, the auction will be off the property. In other words, it's extinguished, it's deleted. And who does that? Well, it's an act of law. Now, I didn't create all this. The legislature of the state creates the law, and then they allow the county to do that. And the county will execute on all these, and the county will take property. The county has power. Plenty of power. They don't call it taking the property. They call it confiscation. They seize the property. They take it away from you. The property owner that's sitting there, they just give them the boot. They just give them a big boot like that, and they're out, whether they want to or not. The government has power to do that. So most tax deed auctions will, number one, wipe out the auction. Number two, most of the properties are empty. If you're concerned about getting someone out and there was a person in there, you just use a legal process. It's called eviction. If anybody told you that was hard, forget it. It's not hard. You call the sheriff, he does the whole job for you. Probably cost you $500 or $1,000. But the point is, the properties are empty. What are you going to do with them? So be thinking about that. Just think about it. All right, now where do these auctions start? Auctions generally start at somewhere very close to the back taxes. For example, taxes are generally 1 to 1.5%. So a property that's worth $100,000 is going to have at least a $1,000 tax bill. If it's worth $500,000, it's probably got a $5,000, something in that range. But what if it was behind 2 years? Well, then suddenly it's $5,000 or $10,000 plus some penalties. The point is, if you could buy for that price without a mortgage, have you just made the deal of your lifetime? You definitely have just made the deal of your lifetime. Now, some of my clients make 100% their first year, but 100% doesn't mean anything. What you want to know is, Ted, can I make $25,000, $50,000, or $100,000 on a deal? Absolutely, because we're going to show you how to buy it low, sell it low, and we're going to show you how to do all that fast. You're probably wondering, how much money do you need to invest? Well, do you want to start small? You want to start with $50 or $100? You could do that. But if you got 20% on $100, how much did you make? So you probably ought to think about a little bit more money. Normal investors start out with $4,000, $6,000. Big-time investors, they'll put $50,000, $100,000 in this business in a minute. So you can be a big-time investor or a small investor. When you look at the list of tax liens and tax deeds available, you'll be shocked. There's something for everybody. They'll never run out. This business has been around for 200 years. I didn't invent it. The government did. They'll never go away. In Phoenix, Arizona, 32,000 certificates available. You can't buy them all. It's impossible. So you skeptical guys are sitting out there saying, well, wait a minute. My stockbroker, my attorney, they never told me about this. My professional financial planner never told you. I realize that. Folks, here's what this is. This is an alternative investment. Nothing wrong with your broker, nothing wrong with your attorney, nothing wrong with the financial planner. America runs on commissions, folks. These people have to be paid. These certificates are bought not from Ted Thomas. I'm an educator. All I do is teach you how to do it. You need to learn this because you're going to invest with the government, you're going to get a check back from the government, and the government won't let anybody make commissions. There is no middleman, there is no attorney, there's no accountant, there's no broker. You learn to do this, you buy from the government, you get checks back from the government. I'll have a lot more, but for those of you who want to know more quickly, I have a 1-hour mini course. It doesn't teach you everything, but it'll teach you about tax liens, tax deeds, and you'll see people actually making money. All you have to do is go below me and order that course. Up to you.